Good evening for Friday, August the 12th. The end of a week, and what a week it has been. The market, well, it did finish up today. It did finish up, we'll say, 126 points on the Dow. S&P was up a little over 6. But for the week as a whole, the market was down 175 points. But a lot of damage has been done, and I'll get to that in a moment here when I go through our 15-week, 40-week exponential moving average. I just want to point out several things to you from my perspective. But before we do that, I just wanted to make mention of the fact in Europe, Italy, to be specifically, has pretty much gone the way of Greece by way of instituting some major austerity programs going forward. And I would say with these austerity measures, which I would agree with. However, I really believe with these austerity measures being kicked in, we will soon have Greek-like strikes in Italy. It is going to happen. So even though, the world markets, equity markets were kind of relatively calm today, we are still going to see tremendous volatility. Okay, let's get to exponential moving averages here. Here you have over the past 3 years. And over the past 3 years, you can see that basically what transpired in the S&P 500. We did bottom here in March of 2009. And, the solid line here, we rallied. I'm going to draw your attention to the green line, which I've identified here as a bullish support line. Well, when we connect these points, you can see, came down, support reversed itself, came down, support reversed itself, and came all the way up, and we did penetrate it this week. And these would be closing prices. The solid line happens to be our closing prices. So that would be the number one impact to market action this week, is taking out this long-term trend line or support line. It held, not this time. The second thing I want to point out is this little formation here, and this is what we refer as a so-called head and shoulders pattern. This would be the left shoulder, this would be the head, and this would be the right shoulder. And I've indicated here the neckline. That's this horizontal line in red. We have taken that out likewise this week. So head and shoulders pattern taken out. Prices are heading south according to this. So this would really be a formation that, in my opinion, you'd want to be looking at after a tremendous move to the upside. That's when I think these head and shoulder patterns are really worth focusing in on, is that they occur after a major move. Our 1540, well, our 15-week EMA is still above our 40. Matter of fact, I've indicated here in red by slightly more than 13 points. So 13 more points. If the 15-week EMA does penetrate it to a downside, in my opinion, that would be confirmation that we have definitely gone from a primary bull trend to now a primary bear trend. We have the penetration of the support. We have the penetration of price that's based on the neckline, and I would see that prices are going to decline. I'm still anticipating kind of a throwback back to the neckline, which would be good, but I really am looking forward to the 15 going beneath the 40. And I think that is very, very significant, especially for those of you that are still in the equity area, especially with your 401ks, 403bs, whatever it may be. I think this is the time you want to take a serious consideration to focus in on moving equity positions on into maybe specific money market funds, CDs. I think we are entering a bear market for the reasons that I just indicated. But then again, anything can happen. That is just my opinion. Have a great weekend. Touch base with you all next week.